Hey, what's going on, guys? Max here with Because Bitcoin. Today, we are joined by one of our analysts, Jackus, and we are going to be talking about assets adjusted for US CPI. Now, of course, it's extremely important and useful to gauge how your investments are performing against CPI or inflation, because you want to make sure that you're not losing purchasing power, especially this day and age where last year, I believe our highest print was 9.1%. So, in theory, if your assets appreciated 9.1%, and that year's CPI was, roughly 9%, you're basically just treading water and you're not really losing or gaining any purchasing power, but you had to have a pretty good year in order to not lose purchasing power. So something that Jackus and I have talked about before privately, and I believe on our live YouTube show, Market Check, is, one, how do you gauge your performance against inflation? Two, can you track certain assets, if not all assets, and actually chart them against inflation? And really just trying to make sure that you're not only treading water and keeping up with inflation, but actually outperforming it so that you're increasing your purchasing power, which of course is ultimately the goal of investing, is to have more money, increase your wealth, increase your purchasing power. So Jackus has some really interesting charts that we're going to go over today, to hopefully help you guys better navigate some of your favorite assets of choice. So we'll kick it over to Jackus. So Jackus, what are we looking at?
Hey guys, currently we are looking at BTC adjusted for US CPI. It's pretty straightforward chart. It's on a logarithmic mode, so it has a better visualization. And I like to use logarithmic trend lines confluent with horizontals. I think horizontals are the most important, but as I've shown so many times, logarithmic trends are very useful as well, and do not underestimate those. Those are not memes. So this is once again BTC versus USCPI, and what we are seeing is pretty clean levels down here. For example, we are seeing that basically BTC did retest the infamous 14K level, if we adjusted for the US CPI. It was a pretty clean touch here, but if you kept it just on the classical USD chart, you did not see this. And by the way, this did happen on many BTC pair ratios. For example, if you're gonna check BTC USD versus gold, or BTC USD versus M2 money supply, or so on, many of these has retested the sort of 14K level. And this one is very clean. We are yet to reclaim the sort of 30K range, if we can call it that way, from 2021. But we can see how cleanly confluent it was. For example, this past all-time high right here, when we broken below. And we can even sort of call this a deviation or accumulation, whatever. And it's right here. Now we flip that level, double retested, and we're going higher.
It's very interesting about this chart is I feel like it actually is trading cleaner than the normal Bitcoin USD chart.
I feel at this point, any other pair that people are not looking at is trading way more cleaner than the USD chart.
Euros, yeah, you've done your BTC Euro chart. That one's cleaner too. Most are, it seems like.
Yeah, if we quickly jump on the BTC Euro chart, it's like super clean. Like if most people seen this right when we are trading at that sort of 25K on the USD pair, and if they saw this double retest, confluent with this higher time frame range, they would just tell you, hey, it's so obvious. If this was 5-minute chart, then everyone would be screaming, hey, this is so obvious. But because they did not see it on the USD chart, then they did not use it. They thought we are going lower first. And that's where using these alternative pairs is one of the greatest tools I have discovered in this bear market.
Yeah, absolutely. So I noticed on the Bitcoin adjusted for US CPI chart that we were just looking at, there was a big diagonal logarithmic trend line. And you can confirm that trend line doesn't exist on the normal Bitcoin USD chart. That one, so it only exists on this one, because that's pretty wild that exists on this chart, and it's so perfect. How many tags we've had of it? It's perfect. Yeah.
Right. We had 1, 2, 3. Obviously, the COVID capitulation in low liquid times. So that's 4th, 5th, 6th touches. maybe we get one in the future as well in some wild capitulation, like
Mhm.
who knows? Maybe it's something like, you know.
Maybe it's the bottom of next bear market. Maybe we don't touch it for like three more years or something. You never know.
You never know. That's true. We'll see. But yeah, definitely pretty clean. We could almost say in a pretty clean channel, though, right?
Oh, that's really clean.
That's pretty clean. I'm gonna keep this one.
What about the midline? Is there a midline you could
Oh,
draw there?
I'll try that.
Maybe
Look at
that's
this,
perfect
though.
too.
Right.
That's really perfect.
I often wonder if these are really random or
It's a big conspiracy, right? It shouldn't be that perfect.
yeah, it shouldn't be
Yeah.
this perfect.
Yeah.
Okay, so the midline. Okay, let's use first. Let's use it random, sort of. I'm okay.
There you
Maybe
go. Yeah.
there is something. Maybe on the monthly though. I wouldn't give too much weight on the midline though, but I
Hmm.
definitely do think that like this one, and anyone that keeps on laughing at these logarithmic trend lines, I still gotta show this logarithmic trend line on the Nasdaq, and this has just been absolutely the best thing you could have used to trade the Nasdaq chart, right? Anytime it touched the upper channel, it's a sell. Anytime it touched the bottom, it's a buy.
For
And
over
it
a
was as
decade.
clean
For over
for
a decade.
over a decade,
Yeah, that's
legit.
incredible.
And you know that I've been calling this, ahead of
Yeah.
the touch. I was saying we probably most likely react there, and we have. So these are super amazing to use on the logarithmic. So do not.
Speaking of TradFi, do you have any TradFi adjusted for US CPI like the Dow? Yeah.
I think these are very awesome to use as well.
This is the
This is the
Dow adjusted for US CPI.
exactly,
Okay.
and we can see how clean these levels are on. And I'm gonna go on to 3 months because this is a really long time chart, but we can see how these are pretty clean as well. It cannot be coincidence that on the Dow Jones versus US CPI, we had a precise retest of the 80s stagflation period, precise retest of the high. And what's also amazing is that they've made it to look like a sideways action through the 80s, sorry, through the 70s, right? Basically since 66.
Mhm.
Actually, I'm gonna pull out the chart how only through the 70s, so you can see it yourself how it looked in the real chart. Let me read this. So this is how it looked, right? In like this is what everyone is looking at. They just look at this sideways action and then further upsides. So they will say that number always go up. But in reality, if you're gonna adjust it for the US CPI, what we find out is that during the same period, the market basically went minus 75%, and it was a very clean downtrend all the way up until 82, right? Very,
So
very
your
clean
purchasing
downtrend.
was just getting destroyed back then.
Exactly.
Yeah. And
Well,
once
well,
again,
if you
like CPI chart, the Dow Jones adjusted for US CPI actually is looking like it trades cleaner than just the normal Dow Jones chart, which is funny, like that perfect retest later on and stuff.
exactly, and so if you like bought anywhere around here, right? So you saw that you bought and you're relatively, let's say you bought just the middle, and then the decade went by, and you were thinking like you are basically at the same price, so it's a no loss. But in the real purchasing power, as Max said, you were actually losing because it was trending down. So that's exactly when these charts come very handy, and we do see that these are very precise, and we do see these reactions. Here we grew above the sort of, we could call it stagflation of the millennia, right? And then this was the 2008, we broke above, retested, then COVID came, retested this level, and now we are higher again. So yeah, let's look at SPX, what we get there. We see that we had basically the same thing Here we had a breakout. Then we created this little support right above. And look at this. Clean reaction there too. Look at
Wow.
the channel here, right? Super clean. Then you get the follow through with this retest during COVID. Now, by the way, let's compare this one during COVID with, and this is SPX. Let's compare it with the real SPX chart and see what we have there. So in reality, let me remove these. In reality, what we have seen is sort of like a bounce from nowhere right here during COVID. It did go this low, sure, but we did not even come back and retest this support, right? Not to mention not 2000 high, right? These two did not get retested. But if you adjust it for, then we had a perfect retest of the 2000 level, you know. So these are definitely great tools
And
for
what's
these
so
times.
interesting is, I mean, if you just looked at the normal S&P 500 chart, it's a giant parabola. You know, if you've been investing since the 70s or 80s, you know, it appears as though you have a ton of money, and maybe you do, but a lot of your gains that you're seeing are really just sort of, they're inflation. You know, it's asset prices that are basically tracking inflation. And yes, there are gains to be had above and beyond that, but a lot of that parabola for the S&P 500 could be attributed to high inflation consistently over multiple decades, where then the top chart, the S&P 500 adjusted for US CPI, I mean, you can see it's up, but it's not up nearly as much as the normal chart because it basically takes out CPI.
Exactly, and I've given the percentage chart. It's the index chart used. So in both, I've used the index SPX chart,
Mm-hmm.
and here we can see that the upside is plus 76,000%, but in the real terms, it's only plus 1,800. So that's a huge difference,
Mm-hmm.
right? So once again, these are definitely good to see the real supports and the real value of things rather than using the classical dollar charting. That's also why I say it's good to use the Bitcoin chart and try to measure it against other assets like like gold or even SPX or something like that. Lately, I've tried to check BTC versus Nvidia. This is what
Yeah.
we got. This is pretty interesting. So like we found out that we are basically going sideways uh, since 2013, and each time you sold this range high, you did a great job into Nvidia, right?
Maybe that big sell signal for Bitcoin is when it goes to the range high against Nvidia. That's how you know the top is
Indeed.
in.
Indeed. And you just switch to Nvidia and then get back and and you outperform everyone.
You'd be a billionaire if you'd just been trading Nvidia and Bitcoin back and forth over the years.
Oh yeah. Imagine.
But you
Like
had another really
seriously.
interesting chart. And it's not adjusted for CPI, but before we end the video, you got a tweet about Bitcoin adjusted for M1 money stock.
Yes.
That could be a good
So
one to
this
talk about
one,
too, because it looks like it reclaimed that level, at least from how I'm
yes.
looking at it. Yeah.
This is possibly the most important level for BTC in since 2017. Because since as we can clearly see, we have not been in a bullish cycle on BTC since 2017. All this was basically money printing, but it had no real cycle of its own. Then basically, I said since 2017. And if we use basic levels, and once again, if this was random, it wouldn't be so precise. And what we are seeing right now is, and obviously it's just Monday, so there is still like 6 days to go. But what we are seeing is possible reclaim of this, in my opinion, the most significant of this level on the chart. And if we do, then there is really nothing stopping us from like 50 days, in my opinion. Like there is no real. I'm not seeing any real resistance right here. There are some minor ones, like we could say this one could provide some resistance possibly, but I think it's not a major one. and it will rather slow the price down for a little, like cause like few weeks pullback, and then we continue. And the funny thing is that right down here is when I first mentioned this chart. Right down here, then I was making another update where I think like here that we pull back or retest this breaker, which we have. Look at it once again. Way cleaner, classical USD chart, and then we broken above. So yeah.
It almost seems like the best way to trade and invest in Bitcoin is by never looking at the actual Bitcoin chart and just looking at every other pair possible.
I mean, isn't that the best thing to do for really any asset? Like,
Yeah.
that even Warren Buffett uses lots of these charts where he likes try to measure the Wilshire 5000 index measured against the US GDP, for example, and he is using these alternative charts as well. And in my opinion, those are the best because that's where you find the real value, and if the asset is overvalued or undervalued, especially if you flood it with currency all around the world nowadays.
Yeah, that's true. Very, very true.
This is BTC versus M2. That's pretty interesting as well. We are right at resistance right now. That's true, but slight break above. We are already breaking past this prior all-time high, and it's getting pretty close. You can also see the sort of 14K reclaim. This is the I used all M2s on this one, and this is the most probably accurate. So I used, because BTC is not a dollar denominated asset. It's a global asset. It's being traded in all countries, all in the world. So I used the major currencies, their money supplies. So we have Japan, Euro, Great Britain, and obviously US. I combined them all and divided them by BTC, because all the others, they do not matter. If you all of them, they do matter, but the percentage is so low that it's about these four. And if we that, this is probably the most clean chart, an absolute precise retest of this level. Look at this confluence of the past all-time high. Look at these touches, and then right here trading at this range reclaim. So yeah, once again, I do think we break this one eventually.
Yeah, this is it's like a beautiful chart. It's like an average of every chart that we've looked at. It's like taking into consideration what really is going to move Bitcoin. And it's a little short-sighted to just look at BTC USD, or BTC not adjusted for inflation. Have you ever looked at BTC USD adjusted for inflation, and then also these four?
I have not. So you mean like
you might have to do parentheses on this, like put that in parentheses, all of this.
Yeah, I'll try to. I don't even know what are the right tickers for it. I'll try UCPI. Maybe, yeah. Okay. Then GB CPI plus. Okay.
Here we go. We're on to something. Okay. Oh.
Pretty interesting. So let me use the logarithmic chart first. And then what we are getting is a precise reaction.
That's perfect. Look at that.
That's perfect. That's perfect. Yeah, this range is rather very similar on all. And then we are getting a slight front run right here. Yep.
So pretty similar to other ones. Nothing too different.
Yeah. What's pretty cool though is that whether we use the CPI model or the M2 model, this trend line remains the same on all.
Mm-hmm.
This trend on the logarithmic chart. So that's pretty awesome.
Yeah. That's an important trend line, no question.
Definitely. I'm actually interested to see what do we see if we use BTC USD versus SPX. Now that's a level of confluence.
That's a big level.
That's a huge level.
Yeah. It looks like we're pretty deep into it. We might be breaking out. So you could, yeah, that I like that as FTX as a deviation. I like that. Bear trap. Yeah.
Bear trap.
Yeah, bear trap.
Indeed. Yeah, this is pretty interesting indeed.
I mean, the picture that I'm getting from all of the charts that we've looked at is that Bitcoin is maybe like 2 or 3% away from a really big confirmed breakout, which could take us significantly higher. It looks like every chart is pointing to the same thing.
It really is. And, just a small recline, basically, and yeah, that's the real value. That's when you see it, when you combine all of these charts and it's there. So, I mean, people like these are facts, guys. This is not some just hopium say we go to new all-time highs next week. No, these are pure facts in the chart and should not be underestimated, in my opinion.
Yeah, that's a really interesting chart. Yeah, I've charted Bitcoin against the NASDAQ before, and it looks pretty similar to this, but
Look.
maybe that's
I'm
where
already
we. Oh my gosh!
I'm already seeing this happen, Max.
Giant wedge.
Okay.
So maybe within the next 5 years or 2-3 years, we break out of it. Compress. Oh my god! Hyper Bitcoinization right there, right?
That's pretty interesting. I'm not gonna lie, And
Yeah.
look, and everything. When you say like we are 3% from everything, right? And you're seeing this confluence now too. So what I'm also seeing is lots of confluence above the 50K level. This is the 50K or like 48, of course, but I'm probably gonna overshoot a little. So everything is pointing to me that we should go slightly above it, but we are not gonna reach new all-time highs yet. Whichever chart I use.
I really like this chart. You have to follow this one now and keep us updated because this is
Okay.
if that ends up being a giant logarithmic wedge, it kind of looks like the gold chart on log or gold or silver that you've shown before. It's in that giant compression.
Let's add it to the repertoire. Yeah, I just quickly jumped, guys, here over BTC gold chart. And just like, Max was saying a little bit earlier, where all of these charts are pointing to the same, where we are just like few percentages away to flip a major level. And I do think that's the case. And, if we pull out the BTC gold chart, this one's pretty clean too. Just slight break higher. We are past the 2017 all-time highs, and there is nothing really stopping us to reprice much more quickly. So I do think, once again, gold is going to be leading this commodity cycle now. I think it's entering its bull market, and this is the last stage to really get loaded, get prepared, and when that happens, BTC is a digital commodity. You can argue it as you want, but it is as it is. BTC is a digital commodity. It's confirmed by the SEC. It's confirmed by many other institutions, and it's like that, based on its core fundamentals. So, if commodities are truly going into a decade of commodities, as is my thesis for quite a while now, then BTC is gonna follow on that upside as well, and we just had a pretty damn strong reclaim here for gold. So if we are bullish on gold and expect it to lead the commodities cycle, now let's look at BTC gold chart, and what do we see? We see that it has a major reclaim. So which is better to hold out of these? Well, BTC, obviously. So look at this. That's the 50K level once again.
And Jack, this question for you: it might have been silver. You had a giant logarithmic wedge. I think it might have been silver. Am I remembering that correctly?
It is. Let me
lovely.
just find a. Apologies, I gotta find the right chart, guys. Might gonna use the second chart. I haven't done my homework for
You need
Silver
to
yet.
do the folders.
Yeah. I'm sure we will find a clean chart. It's one of those. Okay. This is the fractal with BTC I have down right here, and this is pretty amazing though. Okay. Third one. Third that max. Here it's gotta be. Okay, it's at least clean enough, right? And we have this.
Yeah,
We have.
and that's kind of when you drew that wedge on Bitcoin SPX, it made me think of this.
Oh yeah.
Yeah.
Oh yeah. Well, there is a major breakout coming in commodities, and with this looking chart, with this perfect retest, it's just I cannot see it being anything else than further upside. And yeah, it's really heading into the decade of commodities. And then if we look at BTC, gets gold, BTC against silver, it's pretty clean levels, and it's telling us that BTC is gonna come out on top.
Yeah. Well, I think you're on to something. I definitely do. But all right, what do you say, Jackus? We're at about the half-hour mark. Anything else you want to touch on?
Now let's wrap it up today, and we continue next time, Max. We cannot share all the alpha in one go, so that's something you taught me.
All right, good idea. Guys, thanks so much for being here. We really appreciate your guys' continued support. Thanks for making it to the end of the video. If you haven't yet, please consider liking and subscribing. Like the video and subscribe to the channel. We greatly appreciate your guys' continued support. Furthermore, if you want some additional premium analysis and insights from myself, Jackus, and the rest of the Because Bitcoin community, you can check out the link in the description of this video below, which will take you to our website. You're able to sign up for our premium analysis packages, which includes a Discord where we share our positioning and additional analysis. We do over an hour of live voice calls with the entire Because Bitcoin team and community on a daily basis. So there is not a harder working group of individuals out there than the Because Bitcoin team. But again, guys, please like and subscribe. Thank you guys so much for being here and making it to the end of the video, and we will see you next time. Take care.